And thank you for joining us. If you just joined us as Smart Means Business. I'm Joram Paul Sonk. Before the break, I was mentioning of the fact that insurance is one of those key sectors in Uganda that most people are actually not taking too much of their concern in regards to following up issues concerning insurance. But two of the most key players in the economy that know the importance of insurance are basically venturing into it and making sure they understand what it means and which policies are aligned on board by the tourism companies in Uganda, by the insurance companies in Uganda. I don't know why I'm still thinking of tourism. Remember, today is the International Tourism Day. Among the issues that we are also going to be talking about as well in this particular discussion. But now we're heading into our discussion where we'll be talking more of the insurance, the state of the insurance amidst the pandemic. And with me, I have Mr. Francis Kamau, who is the CEO and Principal Officer from the GIA Insurance, joining us this particular moment. You're welcome, sir.
Thank you.
And welcome to Smart Means Business.
Thank you for having me.
And I would want to understand what is the state, by the way, what is the state of insurance as of now?
The state of insurance in Uganda is very positive, is looking up. We've actually managed to grow over the period of COVID, both as an insurance, GA Insurance Uganda Limited, and the industry in general. The industry posted growth in the year 2020. At half-year results, we're also doing about 17% growth over last year's same period. Okay. So it's good. We are in a good place.
You're in a good place, I would say. With the story I've actually had in the news hour, it's greatly a good place for the tourism, for insurance, and how you're actually going steep. I would also want to understand, in 2020, I think is when the country actually went into situation of the pandemic. How have the insurance companies survived?
Oh, well, the year 2020 was a difficult year for everyone, and the business in general, and the economy suffered. But surprisingly, the insurance industry is very resilient. Basically, we're here to take care of people's losses, accidents, their financial losses arising from unexpected outcomes. One of which happened over the pandemic. But the industry was able to grow. Like I said earlier, we've seen 2020 was a tough year for many people in business. Many people closed shop. Many businesses laid off people. But the insurance industry, we were able to grow. We actually last year, the year 2020, is the year the insurance industry wrote a business of gross written premium of 1 trillion Uganda shillings.
Oh. The whole insurance industry?
The entire insurance industry, when you combine the different classes of business, when you combine all the premium that every insurer wrote, we did 1 billion Uganda shillings. So that's a milestone.
Where does this come from? Because I only understand a number of businesses who are really facing it hard in the economy. Most of them are not actually surviving. Now, how does insurance actually be? How do the insurance companies now come up and make all this money?
Remember, insurance business is annual and it's renewable. So there's that risk that we continuously carry. And the premium that is paid by the people or business is the consideration for carrying that risk. And I have noted that Ugandans in particular are now taking very keen interest
in insurance.
On insurance and transferring their risks to the insurance in general. So the growth was sustained by what was already written, what we call the renewal premium, and what is new. So what is new is about 10%, but about 90% in the year 2020 was already a business that is running.
And let's actually look at into the situations. Have you received cases of which bigger cases did you receive in regards to the available, let me say, are they called the risks that are being insured? Which did you receive mostly during this time?
Well, if you talk of the risk, there are different risks that we insure because we carry different policies, and different policies of insurance cover different risks. So essentially what you're saying, you have a motor vehicle. This motor vehicle, anything could happen to it, and the owner loses that vehicle. It could burn, it could drive into another car, it could hit somebody else's property, it could be stolen. So when you consider all that, then you decide, no, it's not worth carrying a risk of 10 million Uganda shillings. So I'd rather pay a little premium to the insurance company and transfer all those risks that are equivalent to 10 million Uganda shillings to an insurance company, so that when that outcome, those different outcomes happen, then I'm not left stranded or without a vehicle or go back to looking for another 10 million Uganda shillings to buy another vehicle. The insurance company pays. So that is one aspect of risk. So, but we have many different types of risks. There's what we call general insurance risk.
Okay.
There's that covers assets and property. Material damage to that is covered. There's liability, again, outcomes of unexpected nature out of negligence. And then, of course, there's insurance on the person, like life insurance, medical insurance, workman compensation. And then there's what you call now medical insurance. So different aspects of risk. So those different aspects of risk then present different risk exposures, and it varies. You could have a very big building, and that will be the biggest exposure on property. You could have a big life insured, and that's the biggest exposure on a life company. You could have a big medical limit on an insurance medical cover, and that then presents the highest medical exposure or risk in that. So when these are presented, different insurance will cover different risk exposures, and the quantification of that risk is dependent on what is insured and what the owner wants to transfer to the insurance company.
Okay, let's talk about the work compensation. You didn't mention the work compensation. Have you had those cases, in fact, because most of the people have actually lost jobs, and these are people who have actually come to the insurance company for such premiums? Are they the premiums? I want to understand these terminologies clearly, where we have premiums, have risk. Are they the premiums? The insurance premiums. So how far have you actually been of help to such people? Okay,
let's break it down. So the best way to do is to give an illustration. So a workman compensation policy is presented by an act of parliament. It's a requirement by the government of Uganda that when you have a certain number of people working for you, you must transfer that risk to the insurance company. So then the risk is computed by the number of people, by the estimated annual salary, and the premium is calculated on that basis. The annual estimated salary for everyone, you total it up, plus now the number of people, that's the exposure, because then it means if someone dies at work, if someone, as a result of their occupational duty, what we call occupational hazard, or they are ill as a result of their work, or they are injured, they don't die, but then they have permanent injuries, then that is also taken care of. So this is a cover that protects the worker or employee or staff while at work in case of injuries. So instead of the employer paying directly from their resources, that risk is transferred to us. So it's not when someone exits work that then they are paid. No, it's when they are injured while at work that then the policy pays, either for hospitalization, for medical expenses, or personal physical injury, which is permanent or temporary.
All right. I would want to also understand, with insurance companies, and there's what we call insurance cover, insurance coverage. What does insurance coverage actually mean in terms of insurance?
All right, that's a very good question. So you have the term insurance. The term insurance purely means the transfer of risk. An insurance then is a contract between the insurance company and the person taking out the insurance. It is a contract at law. And every contract then has considerations, which is a premium.
Okay.
It has terms and conditions. It has what each is committing to do. And that's what an insurance policy is. I transfer this risk to you. I have paid you this premium. When this event eventually happens within this period, then you pay the what we call the claim, or the loss is compensated
by the insurance company.
By the insurance company, right. So that is essentially a financial loss that you're taking from the person who is losing their property to the insurance company, and the insurance company pays. So an insurance policy is the evidence of the contract between the insuring person and the insurance company. So we have certain terms, like you said. We have a policy of insurance, okay, which is a contract. You have the insuring person, which is the insured. You have the policy document, or the policy, which is now the evidence of the contract. And then you have the premium, which is a consideration for transferring of the risk. Then you have the claim, the amount of money paid in compensation to the person who's insured.
All right. So let me even ask, what is the contestable period where someone can actually get his get back to where the insurance policy comes in? Like, which period can someone actually wait for the insurance cover to take on?
Oh, that's a good question. So general insurance policies are annual policies. They run for 12 months. So the premium is paid on an annual basis. Okay? Life policies are long-term. You can insure for a whole life, not for the person whose life is insured to benefit from the proceeds of the insurance policy, but this is for the benefit of his family in certain outcomes. So a life policy would be continuous for the rest of someone's life. But in most cases, the general insurance policies are annual. So they are run for 12 months, and that's what we call short-term. So we've got two divisions of cover in terms of the period of the cover: short-term for general insurance and long-term for life insurance. Now, in the event of a claim happening, or we normally recommend that if anything happens to either your property or your loved one or your insured persons, the first thing to do is report to the insurance company. You can call, you can write a letter, you can visit in person to the insurance office, you can send an email. Now we are online. They are different. You can get onto our website and make a report of a claim wherever you are in the world. Number two, we then begin to process the claim. So the claim processing, I bet that's what you're asking. How long does it take to pay the claim? It depends on the nature of the claim. It depends on the documents required. It depends on what needs to be done between the time the claim happens to the time it is settled. Let me give an example. If someone is admitted in hospital and they require treatment, the claim period will last between the time they are admitted in hospital and the time they are discharged. Yeah.
So if it's a period of 3 weeks, how possible can that happen?
Oh yes, it's possible. And again, let me put in additional information in the sense that every policy is unique in the way the claim is processed. We can talk of, we spoke about life insurance or life assurance. The claim is only payable on the death of a person, or if somebody outlives the period of cover, the term of the policy. So again, the period is dependent on that life. In the event of a medical insurance, it is dependent on the period of admission or the treatment period. Okay, so that's a period. But remember, while the person is in hospital, they are receiving treatment, they are being attended to by medical experts, but then the claim is payable to the hospital by the insurance company once it's fully documented and presented to the insurance company. So there are periods agreed. This is a treatment you give. This is a period within which you come back to us and pay us the expenses we've incurred. In the event of a motor vehicle, it will depend. How long, how bad is the damage? How long will it take? Which is a garage you've chosen? So the period of the claim again is dependent on that. In the event of a big, say, let me give an example of a fire policy of a big property. So again, the period is dependent on how extensive is the fire? Was a building gutted to the ground? Are you going to rebuild on that site? And sometimes, occasionally, we have what you call a loss of profit. How long is that period? So every policy and every risk exposure is treated differently. And those specific periods are different depending on the policy and what is being attended to. But let me advise all our viewers, the best thing to do is take an insurance policy, make sure you know the terms, make sure you know what is put in your policy, read through. When you're not sure, consult, ask, write back, visit, ask for explanation, just like we do when we go to doctors and we don't know what we are suffering from. We ask for information. And when there's anything happening, whether it will result into a claim or not, make sure you report immediately, and then we guide you into how long and what needs to be done, what documents need to be provided, how can we help, and we work with you to the conclusion of the claim. And
definitely when you actually mention of policies, someone actually identifying, that is why I want to understand of this is a declaration page. What is a declaration page and what are those features of that particular declaration page? Is it like any other page of, let me say you're admitted to hospital, a form you actually fill in and that's it?
Oh, okay, excellent. I think you're now moving a little deeper. You're now going into documentation of an insurance policy. So we say that the first thing to do is when you need to put in an insurance policy, the first thing that you do is say what you need to transfer. Once you say what you need to transfer, the next level is we give you what we call a proposal form or an application form. So we collect certain information so that we are able to quantify your risk, your loss that is expected. And once that documentation is done, then we issue a policy document. So that's the first thing. Once then you have a policy document, the policy document is issued after the receipt of the proposal form or application form, and that has a declaration, and it goes both ways. We are declaring the information you've given to us will be used to prepare a policy document covering what you have transferred to us, commensurate to the premium you paid and the risk that we are carrying. On the side of the insured or proposer, then you're saying, I have provided information. And because insurance policy, we have what we call utmost good faith. An insurance policy is based on the principle of utmost good faith. What you're saying is, I am an insured, I want this cover, I'm giving you this information. This information is correct, it's accurate to the best of my knowledge. A new insurance company will take this information, give me cover, and at the time of a loss, then you compensate me according to this contract. So that declaration then is put on the policy, as part of the policy documentation, but at the time of a claim, there's what we call then a claim form. A claim form is the document that then the insured fills in to give us the details of what happened,
okay,
when did it happen, how did it happen, what in their estimate is the loss. So then that again has a signature page, has a declaration page where you're saying again, I have incurred this loss, I'm asking you to pay it in line with the policy, and this is again true to the best of my knowledge. So that's another declaration.
Okay. And lastly, before we break off, I want to understand, can someone take two policies and claim for both of them?
Well, there are certain situations that you can take two policies, and certain arrangements can be made for big risks to be shared by two different insurance companies. There are also situations where one risk, same risk, can be insured under two different policies. But essentially, when you have what we call an insurable risk, essentially, one policy is sufficient. Yeah, so we don't recommend that I have a motor vehicle, it's worth 10 million Uganda shillings, and that I've gone to insurance company A, I've taken a policy for 10 million Uganda shillings, but I want to be paid 20 million Uganda shillings, so I go to GA Insurance, I take another 10 million Uganda shillings worth of cover. No, that is double insurance. And in the event of a claim and both policies are current, there's what we call contribution. So if you have 10 million with GA Insurance, you have 10 million with company A, and you have a loss of 5 million, then it means there's contribution. GA will pay 2.5 million, the company A will pay 2.5 million. So because there's another principle of insurance which is very important, and this principle says you cannot benefit from an insurance policy. You cannot make profit from an insurance policy. It's not a business. It's not a gamble. You are compensated. We say what in insurance we call the principle of indemnity. You are placed back exactly where you were immediately, a second before the loss.
And it's actually just reminded me of my Form 3 when I started studying commerce. The idea of insurance and profit can never go hand in hand. Insurance is not business, so you cannot make profit out of it.
Correct.
Like he said it rightly. And of course, we're heading into a break, but when we do return, we're talking more of medical insurance, more in regards to tourism and insurance. I would want to hear his view in regards to that. And of course, we're taking some baby steps in regards to this. I want most of you to actually get something out of the topic and see how you can benefit from insurance. For those that are still having, should I say, bias towards insurance, you should actually pick up some policies as well, and also maybe pick something out of this particular conversation. Let's head into a break. When we return, we're talking more about insurance, but most especially medical insurance.